Good morning, everybody. Welcome to our Thursday questions and answer session. We've got Ross van Coller with us. He's going to be dealing with British American Tobacco and giving us some insights into that stock. And then Sean's going to take us through the technicals. If you have questions and you think of them as we go along, please type them in the chat, or otherwise you can switch on your mic afterwards when we ask you to and ask your questions outright. And we can have a nice, lively conversation about British American Tobacco. Thanks for joining us and thanks for sharing your insight, Ross. Thank you very much.
Good morning, everyone. My name, as Cyril says, is Ross van Coller. I work at PSG Wealth here, covering consumer staples, both locally and offshore. And today we're going to be discussing one of the more popular ones on the JSE, being British American Tobacco. We last did a presentation, I think it was October and November. As far as the macro goes, not much has changed. It's been a constant talking point for the last about 2 to 3 years now, is cigarettes declining, that would be volumes, and then also illicit vapes, which has impacted both Philip Morris and British American Tobacco, and that's basically just Chinese vapes entering the US without any FDA approval or paying any taxes. The other thing that sort of lifted bats in December, January was the lifting of the menthol ban. That was a ban put in by the previous administration, which Trump has now lifted, which should see a little bit of a mitigating factor from the cigarette volume declines. It won't completely offset them, but as I'll mention in a moment, the volume declines have been quite large. Previously, we had a 16% upside on the stock. It's risen about 25% before today from a share price point of view in the last 3 months. So it has reached our intrinsic value. So we had about 16%. That's now down to about 0.5%, which are nice problems to have. But all in all, it's done pretty well. As far as results go, if you got the presentation or the report on bats, that wouldn't have included the results. The results came out probably about an hour ago. So I'll talk a little bit on that. But the main talking points was a slight decline in revenue, which was expected. The US combustible was larger than expected, but that was played out through 2024. They sort of guided for that. And then the only disappointing thing, or two disappointing things, would be the next generation products, which was only up about 9%, which sounds a little bit ungrateful, but we were expecting a little bit more. And then they just guided for low revenue growth and global declines from tobacco, which also no surprises. And then the other talking point was just the Canadian lawsuit back last year, which they expected, which was going to be split between the three major guys there, being Philip Morris, British American Tobacco, and Japan Tobacco. And BAT seems to be taking about 6 billion of that, which they'll amortize over quite a few years. So, but it's more just a talking point. If I just touch on the 24 performance, as I said, these results came out about an hour ago, so I haven't had too much time to go through them. The revenues are down 5.2%, which was expected, although slightly more. We were expecting about 26 billion pounds, so it's about 150 million below that. But they're still growing the rest of their business. Their margins were up. They have a very strong operating margin of about 46%. Earnings per share was roughly flat, and then the dividend was up slightly, which is quite an important factor when it comes to BATs. They pay about a 7 or 8% dividend, which is on top of about a 1% share buyback. You're looking at 7 to 9% in, I like to call it passive expectations over the year. They gave a trading update toward the end of last year, and it just what's sort of happening in the US is, as they try and combat the illicit vapes that are entering them. Obviously, America being basically a state of many states, and not all of this goes through at the same time. But they like to use Louisiana as a talking point because that's where they've seen successful implementation of FDA sanctions or import tariffs, as you like to call, and that's actually seen some traction. 16% increase in any segment in the tobacco industry is very strong, and they're expecting a lot of that to come through in the next call it 18 months to 2 years, which should boost BATs. But as we've seen, these can often be slow or, depending on the state, not implemented at all. So you don't hang your hats too much on everything going through all at once. But it's good to see that the FDA is taking some positive moves towards countering these illicit vapes that are coming into the country. So, the tobacco industry is very much split in two at the moment. You got, on the one hand, you got combustibles or cigarettes declining year on year. So you sort of expect 3 to 5% volume declines a year. That's in the US. Last year they had about 10%, so a lot higher than that was expected, which was a bit of a drag on performance. But then the other side of it, what they call the next generation products or risk reducing products, your healthier options, you're seeing between 16, 20, 70%. Your modern oral, which are your little pouches, that's up 70%, albeit off a lower base for bats. But even Philip Morris, which has quite a high base now, is still growing at about 40 to 45%. So that seems to be the global trend as far as nicotine consumption goes. As things stand, that's about, I think I've got it on the next slide, about 18% of BAT's revenue as per the results this morning, up from about 15%. So they're sitting about 18% of total revenues coming through these next generation products. If you cast your eyes over to the right, you'll see that Philip Morris is close to 40%. So they are ahead of BATs when it comes to the next generation products. They bought out Swedish Match in 21-22, which provided quite a significant boost. But still, BATs maintains market share in the US, whereas Philip Morris is seeing significant growth externally whilst entering the US market. So I mentioned the one disappointing factor being only the 9% net NGP growth. The other disappointing thing I found was that the net debt, which has been quite a talking point for a while, didn't come down as much as we were hoping. They were expecting 2.5 times net debt to EBITDA towards the end of 2023. That came in at about 2.57, so slightly higher there. But we were expecting about 2.25 for 2024, and that came in at 2.44. It's still all manageable, and the balance sheet isn't of major concern, but when a company is growing at 1-2%, the interest charges are quite important. So they're still going to have slightly higher interest charges, and the staggering of their debt is a little bit, unbalanced. A lot's coming due in the next 2 to 3 years, which will be good in terms of bringing the revenue down. The debt down. And then after that, it sort of plateaus out a bit. So they might do some renegotiations of that debt going forward. But a large chunk is due this year, which will bring it closer to about two times. And at that point, we expect a few more cash returns to shareholders. So they did announce £900 million in share buybacks, which was very much in line with what they guided with at the end of 2023. That was £700 million last year and another £900 million this year, which equates to about 1% of their share count. This is something that was quite topical, I'd say, about a year ago. British American Tobacco had a 30% stake in what was previously known as the Indian Tobacco Company. It's now just called ITC. They don't really do tobacco at all anymore. It's a mixture of fast consumable goods, hotels, packaging, that sort of thing. But it got to a stage where the ITC market cap was greater than BAT's market cap. So a 30% stake in that provided quite a nice diversification benefit. They paid down, or they sold down to 2.5-3% of that, close to the 25% stake, which gives them voting control or keeps voting control. And then they were able to pay back some debt just on the back of that. But they still own about 25% of that company. From an industry point of view, you've done quite well if you've held any of these shares other than Japan Tobacco. If you hold BATs, you're up about 40 to 50%. Over the past year. Philip Morris, you did even better, over 60%. So in a time where tech has done quite well. It's nice to see that the staples and the defensive guys have kept up, whilst also paying back a nice little dividend, and you've got a defensive part to your portfolio if you like to diversify like that. From a valuation point of view and returns, that's, as I said, strong last 3 months, 26% up. It's come more in line with our intrinsic. We were hoping it would, re-rate from a multiple point of view. Philip Morris has done a little bit better, but even with a 49% return over 1 year for BATS, they're still trading at half the multiples of Philip Morris. In a way, for a reason. Philip Morris, you have more of a growth story there, whereas BATS more defensive, higher dividends. But even at these levels, we don't particularly see it being exceptionally expensive or having run a little bit hard. It's run a bit hard in the last 3 months, so we did expect a little bit of a pullback. And it is down about 8% today after results. Slightly worse than expected, but in the general grand scheme of things, pretty much in line. Since our last report, my intrinsic has gone up slightly. So only about 0.5% upside, although after today, probably got closer to 10%. Pretty much nothing they said in today's results will change the intrinsic, but we're forecasting out further, a little bit below consensus, but your net debt should come down, shares will come down, 7% dividend yield, 1% buyback. You should have a nice 8%, safe bet there. But as things stand, we think it's pretty fairly priced after quite a hard run in the last year. That's pretty much it from me. I'll take questions after Sean has gone through the technicals with you. Thank you very much.
Yeah, thanks, Ross. Yeah, excuse me. Yeah, you can see that that's a chart of British American tobacco until yesterday, and obviously today the chart looks radically different. But based on that chart there, you can see it's trading far above its 20-day, its 50-day and 200-day moving averages. And at that point in time, I was still calling the medium term and the long term terms bullish. Based on this chart, the share price was has recently broken out above that upper resistance or of a sideways or trendless market, and it moved into new territory far above its all-time high, about 742, and that was reached way back in December 2022. The share price was trading close to its intrinsic value, as Ross said, now about 782, and that's where we had the old recommendation. But since then, the share price, as Ross said, has pulled back more than, going on 8.5% now, trading very close to what's that, 711 Rand now. So going back to this chart again, the MSAD indicator was trading far in overbought territory and above its trigger line. And obviously at this point in time was not giving any bearish signals, but today obviously it has given a bearish signal. The other technical short-term oscillators were also trading in overbought territory, and the on-balance volume was still showing strong volume accumulation, which supported the bullish price action. But also you can see on this chart, we could see some what do you call dojis, Japanese candlesticks, we call them dojis. This is where the basically the chart shows indecision. And obviously this is before the results were released today. But it's a small body dominated by wicks. That's on the upper side and the lower side, what we call shadows. But basically indicating that neither the bulls or the bears were in control until yesterday. And obviously today we've seen that the bears are in control. There's a lot of sellers in the market. So we could expect the share price to pull back, and which it has. And we could see it maybe retest those moving averages, and I see it is going through that at the moment, and possibly retest that previous resistance at about 700 Rand level. Should that level not hold, we could expect a further pullback to that previous previous resistance support level around about 662. But if it comes down to these levels, I think it'd be great buying opportunities. Yeah, and that's how I see it. Thank you.
Yeah, thanks, Sean. Thanks. I agree. I think look, this thing's been trending up nicely over the last 3 months. It's slowly made its way up, broke through that resistance level at the top, and ran with really small candles. So it was a bit speculative. I agree with you. Although the volume at the bottom was quite spiky, you know, there was some good volume days. The share is taking a proper bath this morning. And I think it's a bit overdone. Like Sean said, I think probably touch the 700 level and bounce from that. When shares disappoint with their earnings, we typically see a massive pullback and everybody overreacting, and then a day or two later, the thing sort of starts ticking up and you know, retraces a little bit higher. But Ross, well done for getting that intrinsic value almost spot on, mate. That was a good call you made. I think you called that intrinsic value in July last year already. So good call, mate. Well done. Yeah, British American then flipping slightly lower today on the back of the disappointing results. As Ross said, not as disappointing as the market may be suggesting, but still unexpected. We are pricing it below the consensus value, so Ross's intrinsic value pretty much holds. And we might see it bounce off 700 and go back up there again. So there may be a short-term opportunity in picking up some here. It's just sad I didn't sell mine at 780 to buy them back again this morning at 700. But yeah, that's the story with British American Tobacco. Let's see if there's anything in the chat, any questions people have. I don't see anything in the chat. Is there somebody that wants to ask an outright question to Ross? No, doesn't sound like that either. I'll keep my eyes on the
I have
chat,
a question.
Ross, but yeah, please go. Please do.
So not too long ago, I believe it was Remgro that sold its stake in BAT, or was it Richmond? How will that affect the company?
Yeah, it was Remgro. Was it Renet? No, sorry, it was Renet. So Renet basically was a two-company holding company. They own the British Pension Corp and BATS. They sold down the entire stake, and I think on the day, if I'm not mistaken, Renet was up about 5% and BATS was down 4%. But it doesn't. I think it says more about Renet than it does about British American Tobacco. They were long-term shareholders. They seem to want to diversify into something else. But BATS is, you know, a large enough company that, you know, the shareholders are going to change from time to time. That seems to be their stake. They didn't really give too much information about it, but it won't. I think if you're a Renet investor, it might change your opinion. But if you're a BATS investor, it shouldn't really matter. So they probably see better value for their capital, Renet that is. BATS still has their own mission and their own goals. So I wouldn't. On the day, you would have probably seen a little bit of a change, but I think, you know, in the grander scheme of things, that reversed itself in the space of a week.
Thanks, Ross. Richard says, you spoke about the percentage or the ratio between normal tobacco products and these new gen chewables and vapes and stuff. Richard's asking, when do you think the new gen products will be 50% of sales? Is there a projection for that?
There is. It's a very good question because BATS, I think in 2022 or 2023, predicted about £5 billion by 2025, by the end of FY25. And their results today came in at about $3.5 billion. So about a year ago, I thought those targets were a little bit ambitious, the $5 billion. When you consider that they do about 25 billion, that's what, 20% of revenue. So Philip Morris targeted 50% by 2030. They had 40%, so they've got another 5 years to reach that. BATS is targeting they call it a smoke-free world, or smoke-free company by 2035. So they've got 10 years before they see it at 50%. it's a bit funny that they call it a smoke-free world, because from what I've seen, vapes still produce a lot of smoke. But essentially, they're just saying getting away from combustibles to NGPs. So 50% by 2035 is their goal, long-term goal. Philip Morris is only 10% away from that, and they've got another 5 years to achieve that.
Yeah, I also think a smoke-free world's far, far away. I mean, those Japanese oaks, they smoke like it's nobody's business. And they smoke cigarettes. I mean, if you recall, the last SAA flight that permitted smoking on board was the one to Tokyo. The rest of the world had long stopped, and you could still fly to Tokyo and barely smoke away. So, the Japanese...
Eastern Europe, even Southern Europe to an extent, you're seeing, increased volumes. So Japan and Eastern Europe are still, and the likes of Pakistan and some of the Southeast Asian countries are still seeing increase in volumes. But if you look to the Western world, there's definitely a more of a trend towards less cigarettes, more risk-reducing products, vapes, and oral pouches. Yeah,
it's not, doesn't really have a bearing on the batch price, but a company like Japanese tobacco or Japan Tobacco, do they also have these new gen products?
Yeah, they will do. They've just, obviously with Japan Tobacco, you've got a more of a consolidated market, and the currency fluctuation is a lot more of an issue when you look at the share price and stuff. But all of them are going that route. I think they know that the writing is on the wall when it comes to cigarettes. But I think a lot of people, or maybe not a lot, but they expected, very much like electric vehicles, they expected everything to change by 2030, and now everyone's coming to the realization that these targets are probably unrealistic. So you look at 2040, 2050. I mean, if you remember, towards the end of last year, BAT said they were going to write down their cigarette business that they bought from Reynolds America over 25 years. So by 2050, they would have written that off completely. But even by 2050, 25 years is a long time, but they still, the fact that they are amortizing that asset over 25 years, I think tells you one thing.
Something I'm wondering about, obviously in their projections and their management projections into budgets and stuff, they obviously count in the fact that they may be successful in having legislation protect them as far as illicit products are concerned, and that, as you mentioned, in Louisiana. But from a realistic point of view, I think it's going to be hard to curb these oaks just bringing in cheaper, unlicensed product. We see it all over the world. I mean, there's a China mall in every town now. So I think it's going to be hard for them to also grow their healthier products against the competition of these illicit products.
Yeah, I mentioned in my previous couple of presentations, I just felt people might be getting bored of me talking, but there's been these FDA regulations, strong regulations for a few years now, and I mean, for the Chinese to bring in their illicit products, it was just as simple as changing the name of the product. So they went from, in South Africa, we get Ulf bars, which they had in America. Then, FDA says, okay, no more Ulf bars. And then they change it to EC Create. I think exact same product, different labeling. And then it flows through the ports, and then they banned that, and now they're onto the third one. Regulation is supposed to be BAT's sort of biggest friend, but it's also its biggest enemy. Because obviously smoking is highly regulated, but if people are going to smoke, people are going to vape, at least get the approved products through. So, they're sort of fighting a battle on two fronts there, in terms of, the FDA attacking the legitimate guys and not really worrying about the illegitimate guys. But the Louisiana is a good focal point, and as I said, it varies from state to state. So Louisiana, it seems to be getting it right. So hopefully that model can go through, because at the end of the day, it's good for the American consumer and it's good for the American government from a tax point of view.
Yeah, it's triggered a two-part question in my head. What sort of percentage of their total product goes to the US? And then second part of the question is, with Trump imposing tariffs and threatening tariffs against everybody, this being a British company, will the tariffs also be levied their way?
Yeah. So the first part of the question is about 53% of BAT's business is done in the States. But the ironic thing is that you've got Philip Morris, which is an American company that does all of its business outside of America, or the majority of its business. And then you've got British American Tobacco, which is a British company that does the majority of its business in the US. So the imports, if they can get those imports right, it would benefit BATS because the competition is coming from outside. So the tariffs are not really. It should work in BAT's favor. It should be more anti Philip Morris. But as we see, the tariffs will be quite negative on a lot of things. But if you're getting through the ports illegally anyway, those tariffs won't have much of an impact. But BATS is a British company doing American business. So any sort of tariff will, stifle the competition more than it will stifle BATS itself.
Yeah, okay. That answers my question, because I tried to ascertain whether the tariffs would have an impact on BATS, but maybe less so than what it would have, on their competitors. Okay. So I see we are out of time. We don't have any other questions. I think to summarize, we saw BATS running nicely from Ross's prediction, saying that there's a bit of intrinsic value and upside in it. Today he said that it's a hold because it was trading at around the 780 level, which is his intrinsic value. The results came out an hour ago and was slightly disappointing, and the market's absolutely selling it off, overreacting in my view. And as Sean has said, there's a strong support level around 700 and will probably bounce from that. May not return to the intrinsic value of 780 again, but I mean, at least retrace halfway and then sort of build a base to work sideways to see whether the promises the management have made gets delivered on, I guess. Ross, thanks for sharing your insight, mate. Thank you, Sean, for your technical bit. Yeah, it's nice. Thanks for the explanation on the doji candles. You can definitely see the shorter candles with the smaller bodies, all over the chart. Every time that happens, it's sort of a short-term reversal in trend, and it shows a bit of uncertainty. Certainly, if you look back to the start of 2025, we were still going up, and then we saw a red candle, and then a whole bunch with small bodies, and then dip down again. Small bodies, small bodies, small bodies. Not so sure about this downward move, and then big green candle to take us up through the resistance level, followed by a bunch of green candles, and then really small body candles before today's big red one. Okay, guys, thanks for joining us. We'll be back next week. I think we're talking mining. We got Sibanye next week, I think, and we got Harmony after that. So we're back on the mining stocks next week, guys. Thank you for joining us today. Thanks, Ross. Thanks, Sean.
Cool.
Have a lucky Thursday. Cheers. Bye-bye.
Thanks, guys.
Thank you.